Thank you, Anthony, for joining me. Guys, I'm extremely fortunate to have with me today Antony Jenkins, founder and executive chairman of 10x Banking. Antony is a member of board of Fannie Mae, the US mortgage behemoth, and group chairman of Currencies Direct. Antony has been a career banker and led Barclays Bank as a group CEO before founding 10x. Antony, a very warm welcome to you, and thanks for agreeing to do this session. Your career in banking experience of building and scaling 10x is so unique combination, and your perspective of the latest at the intersection of banking and fintech world would be extremely valuable for the viewers. So thanks again for joining me, Anthony.
It's a pleasure to be here. Thank you so much.
Thank you. So let me just kick off by saying that there is a great deal of excitement about 10x technology in the market, and you have made good strides over the past 3 years. So can you please tell us what inspired you to start 10x, Anthony?
I suppose in many ways, 10x is a reflection of my whole career. I spent 30 odd years working in large banks all around the world, and it was very clear to me that there were two fundamental issues confronting the industry. The first issue was about customer focus. So, how do we deliver products and services that are much more focused on the needs of the customer? I always used to say to my colleagues, in the big banks, we have to remember that the business of financial services for most of our customers is not that exciting. Sometimes it's intimidating. Sometimes it makes people feel like they don't know what they're doing. But what it empowers in people's lives is incredibly important. So this notion that if as an organization we could make the customer's life much easier, we were doing a good thing for them, and consequently we would be able to grow our business. And the second thing that had always fascinated me was why we hadn't seen true transformation in financial services. We've seen lots of innovation, we've seen lots of improvement, but basically we haven't seen true transformation. And when I make a distinction between innovation and transformation in the sense that innovation is about basically doing something similar but in a different way. So an ATM is a good example of, you used to only be able to get money when the bank was closed, now you can get it 24/7. Whereas true transformation is about doing radically different ways of serving the customer, making the customer's life much easier in a radically different way. And throughout my career, I had been grappling with many of these challenges. Post the financial crisis, of course, there were many pressures on banks as they recapitalized, appropriately so. That caused pressure on return on equity. We already knew that customers' expectations around the use of technology were increasing quite significantly, actually. And so in the course of my work, I believed that it was possible to create a banking system that was literally 10 times better than the one we have at present, and to do that using new technology. And that was really what caused me to set up 10x. And there's a lot of talk now about purpose-driven businesses, but we really are a purpose-driven business. Our purpose is to make banking 10 times better for banks, better for their customers, and consequently better for society. And so that really is the underpinnings of it, and in many ways, the distillation of my 30-odd years in the industry.
Wonderful. Thank you so much. Just as a follow-up to this, if you look at the environment around us, it's not easy for mature market banks. They have very high cost-income ratios. The innovative neobanks and big tech was on their heels even before the crisis and was sort of chipping away the market share. But COVID-19 situation has, led to further drops in incomes. Net interest margins at an all-time low. Mortgage market was frozen for a while, and we expect huge amount of impairments and losses in lending. And it's further sort of deteriorated by the geopolitical issues that are impacting cross-border trade or global transactions. Can you give us some insight on what you are hearing from the banks in the current climate and your personal view on the banking industry at this point in time, Anthony?
Yeah, certainly. If you go back to post 2009, a series of regulatory reforms were implemented. And again, I believe they were the right reforms, but they basically require banks to carry a lot more capital and a lot more liquidity. And it's been very hard for banks, with some exceptions, but generally quite hard for banks to deliver a return on equity above the cost of capital. And that challenge persisted before COVID, as of course did the technology challenges, and I like to think of them as the sort of trinity of technology challenges. The first being the kind of archaic banking systems that exist inside banks today. As I like to say, it's a museum of technology. Every generation of hardware and software lives inside a bank. Then you've got the rise of the fintechs. Some, not all, of course, but some are really starting to gain some traction. And then on the flank of the banks, the big tech companies who are increasingly looking at financial services, although in my view, unlikely to become banks themselves, but could quite easily sort of disintermediate banks progressively. So you have all the challenges post the financial crisis, these technology challenges, and then COVID comes along. And what COVID's done is basically accelerate all of those problems. So you've got now very low interest rates, which are likely to persist for a long period of time. You've got a bow wave of credit losses that will be coming as economies inevitably slow. And you've got customers wanting everything to be even more digital because they've got used to it. And I think the other thing that's gone on in the banking industry now is there's a sort of generational change in the leadership of banks, as most of the leaders that took over post the financial crisis had the jobs of navigating their institutions through a lot of legacy issues and fixing the balance sheet and all of that. And now there's a new generation of CEOs coming in and executive teams who really have to confront this key strategic challenge. And I would sum that strategic challenge up as follows, which is, how can I massively automate my bank so that I can serve my customers better and remain competitive while improving the economics? And that's what it comes down to, because if you look inside a big bank, firstly, what banks do is basically handle data, but they do it very inefficiently. So if you can automate the process of handling data, then you can be much more competitive in the marketplace, drive your cost income ratio down, drive your return on equity up. And I do believe that we're going to see a separation now between the banks that kind of get that and can execute it and those that don't. And in talking to the banks, as we do, there are many now that are focusing on this topic. And the ones that work with us, for example, are very keen on finding some use cases which are important to them. But really behind all of that is understanding how these new technologies work, both from a technical point of view, but more importantly, from a people, culture, and leadership point of view. So how do I deploy these new technologies into an organization which is used to waterfall, used to mainframes, used to sort of 20% utilization on massive server farms? How do I completely flip that on its head? Because most bank leaders now realize they have to address this problem. It is the strategic challenge for them.
Wonderful. Thank you so much. I mean, that's a very profound sort of view on the banking industry. Just kind of having a look at the global markets from a banking perspective. So look, banking is globally diverging. I mean, there is a great innovation happening in Asia, starting with the payment space, and the digital adoption has been incredibly high. I mean, largely because of low-cost offerings, real-time, faster service, ease of use, and better and personalized features, all because of technology. And as compared to Asia, how do you see the mature markets, banks in Europe and North America? How do they stack up essentially?
Yeah, I think in Asia, you're seeing a few trends there. So one is this sort of massive switch to digital across everybody's lives, often intermediated through common entry points like a WeChat in China, for example, on the one hand. On the other hand, progressive deregulation in markets like Singapore and Hong Kong, where regulators are keen to create more competition in those environments. And so you've seen really a lot of leapfrogging going on. And of course, in Asia, you have continuing an emerging middle class with a big demand for banking services. If you look at Europe and North America, what's happened there is basically banks have to date met the needs of their customers by bolting kind of mobile technology in large part onto clunky old back-end systems. And you can get away with that for a while, but it will not solve the fundamental problem of how you manage data more effectively. And in my view, in both Europe and the US, these banks are falling, further and further behind. The pressures upon them, as we talked about a moment ago, are only increasing. And so there's a bias for action. Now, sometimes in Europe, you'll hear people talk about, well, maybe we should just merge some banks to consolidate the sector. But actually, the history of bank mergers is pretty spotty in terms of what it actually delivers, particularly for shareholders. And I don't think, in my view, putting together two banks with relatively poor technology to create one big bank with lots of poor technology is the solution to this problem. It really lies in the hard yards of kind of re-engineering the operating platform of the bank. There are some, of course, which have developed, something of a reputation for the deployment of technology in Europe, but there's very few. They're very few and far between, and even they are still largely living mostly on their legacy systems. So, the US and Europe are going to have to catch up. And I would include, Canada in there, as well as other markets, like Australia, as this sort of wave of change goes through the industry. And it really is existential for the banks, because, there are some that would argue that banks are currently, certainly in Europe, uninvestable because their returns on equity are so low, their discount to book is so high. It's almost impossible, to put money into the banks, because the market is basically saying that the business model is flawed.
Yes. Now, I was reading somewhere about data from McKinsey, which came out saying there are 25,400 banks roughly globally, and a large part of that is in the mature markets, and half of them will not survive in the next 15 years. So 15 years seems to be a long way, but it's still, they have to do something and act very fast now. So very well said, Antony. Thank you. And look, just shifting gears a bit to the fintech side of things. Fintech saw record levels of funding in 2019, but this funding was already tapering off towards tail end of that year. And COVID certainly has exacerbated the situation in 2020. In a market where investors were already concentrating funds on a few late stage firms like yours, and market traction, which had market traction and some line of sight to profitability, it may be difficult for fintechs also to broadly survive without funding. So what is your take on the current fintech market, Anthony, and especially from a funding standpoint? Also, are there areas of consolidation already underway in fintech, and what specific areas would that be?
So I think, firstly, if you go back to 2014, 15, when the fintech industry was really kicking off, we're going through a natural sort of maturation of that process, which you see in all industries. There's a lot of hype at the start and very high valuations and so on. And just as a matter of time, some of the winners begin to emerge. And I do think that in the fintech space, what we're really seeing now is a clear demonstration that customers will change their behavior if they see a better offering. And that is true in things like currencies with TransferWise. You see it in the neobanks. You see it in some areas of wealth management. You see it in some areas of payments. So you can begin to see these shifts in behaviors. And so part of this is just the natural maturation of the industry as the people with the stronger models begin to emerge. Now, a lot of what's gone on to date is B2C. And I think the B2B or B2B2C space is also emerging now. Of course, 10x is really a player in that space, but you can also see people in sort of more narrow verticals, whether it's around your customer, AML, reg tech, these types of things. So I think what we're beginning to see is sort of natural maturation. Of course, businesses that rely on constantly raising capital are inevitably vulnerable when a downturn comes, and COVID just happens to be this downturn. It could have been something else, but it happens to be COVID. So I think it is going to be tough for those people who need to raise money continuously and who don't necessarily have a fully established market position yet to be able to get funding at this point. And inevitably, we've seen a number of redundancies going through the industry. We've seen some raises at quite deep discounts to previous valuations. I'm not I'm not overly worried about that. I think all that's part of the sort of natural process that would have happened, whether it was COVID or something else. But what I do think is going to happen is that this two things are happening. One I mentioned, which is we've demonstrated that customers will change their behavior if there's a better user experience. The other thing that's starting to emerge is, you know, the use of data to be able to make better decisions, whether that's fraud, credit, streamlining operational processes. The use of data to do that is beginning to become one of the key battlegrounds for banks. And of course, banks always talk a good game about, oh, well, we have so much data on our customers. But what they really mean is we've got lots and lots of data, which is only loosely connected around the customer, which requires them to sort of pull it all out of their core systems, dump it in sort of some sort of data lake, and then kind of manage it to get value out of it. Typically, yeah, data scientists in banks spend 80% of their time cleaning the data up. So, but that's starting to become a theme, I think, in the fintech industry. And I would expect we will see inevitably some businesses will go by the wayside. The stronger businesses will continue to be able to fund themselves, and data is going to be increasingly important.
Just shifting gears a bit on digitization. I mean, that's the topic we've been all battling for the last few years now. I mean, see, you also mentioned the approach so far in the banks has been largely around investments in some front-end glossy channels and a bit of patchy back office automation, right? I mean, for customers, this delivers an incomplete digital experience when back-end capabilities inhibit real-time responses from a customer journey standpoint, especially in payments, lending, etc. Can you talk a bit about the innovation 10x platform is bringing to the back-end capabilities, and also briefly touch upon the technology architecture of the platform, Anthony?
Sure. And indeed, there are, you know, many subtleties to this discussion, because if you talk to banks, they'll say, oh, well, our app's got, you know, 5 stars in the app store or something. But actually, if you look at how they actually deliver that service to the customer, it's incredibly cumbersome and very expensive and slow. So their ability to, you know, link their real-time front ends into what are often batch legacy back ends, very, very difficult to do that. And the second thing, of course, is about data and the ability to use data to be much more competitive in terms of serving the customer is also very difficult for them. So when we started 10x 4 years ago now, we had two underlying principles, which we figured were really important to creating something that was 10 times better. The first was to build a customer-centric architecture. So unlike the legacy systems, which are built around product, we build around the customer. So the customer, once they're provisioned on the platform as an entity, is there, and then different activities are attached to that customer, as opposed to in the old world where the customer will be provisioned on the platform for the loans product or the savings product or the mortgage product. And even inside each of those products, there'll be multiple different databases and subsystems. So we've radically simplified the architecture to hang it all around the customer. The second thing we said was, you know, if you think about banking, there's really only 6 things that go on in a bank. And that's true whether you're an individual with no money, a very wealthy individual, a big corporation. You make and receive payments, you borrow or save, and there's many, many different ways of, you know, short-term borrowing, mortgages, everything from short-term savings to investments. You manage risk, often through insurance type products, and then you get information on the first 5 things. So there's only 6 things functionally that a bank does. Now, what we said was, rather than go the product route where every product has to have its own fee engine, its own interest calculator, and so on, let's just build those functionalities once. And the good news for us, of course, was at the time, the API microservices toolkit was there to allow us to build these things. So, you know, there's approximately 140 microservices on the 10x platform focused on this customer-centric architecture. So once the customer is provisioned on the platform, we can then provision as many products as the bank wants to provide them through the use of microservices. The other thing that microservices allows us to do is actually reuse a lot of capability. So once we've built a capability, as we've built small business, as you know, That's now available as a set of microservices to everybody who uses the 10x platform. We've just built Banking as a service for Westpac down in Australia. Again, those functionalities, those microservices sit on the platform. So the next bank that wants to do bank as a service, it's all there ready for them. So there's a huge amount of reuse, which of course means for the bank much faster speed to market, but also much lower cost because these things exist already.
Wonderful. So just tell me about the technology stack as well. You talked about the microservices, APIs. What sort of technology stack is it? Is it cloud native, I'm assuming, and is it modular in nature? And you can actually, so customers can take on modules instead of the whole platform, or how does it work?
Yeah, it's definitely cloud native, and there's an important distinction in my mind between cloud and cloud native. In cloud, you're basically buying, computing power. There are some advantages to that. You can buy it when you need it. So if you have a big spike of activity at the end of the month, you can just buy the capacity for that. You don't have to run the data centers and so on. The difference with cloud native is that we are using the tooling that has been built by the big tech companies to provision the service. So we use a lot of tooling that's already been built, designed to run at huge scale very efficiently inside the cloud world. In terms of how the platform works, at its heart sits what we call the super core. And this basically is the service mesh, the APIs, and the 140 microservices. Around that is a connecting layer, which allows us to interface seamlessly into different general ledgers for banks, different payment systems, different regulatory environments. But also, we've built a number of integrations direct to things like Salesforce, Adobe Marketing Cloud, and so on. So if the bank wants to use those capabilities, they sort of come out of the box. And again, because we built those integrations already, it's much, much faster than doing it the old-fashioned way. And equally, even if we have to integrate to a new provider, we can do that very quickly because we've built this connecting layer around the edge of the platform. So it's very comprehensive. It's much more comprehensive than a traditional core banking platform. It's possible to build an entire retail or small business bank on the platform should you choose to. In reality, most banks have a view about we want to use this particular biometric provider, or we want to use this particular payment engine, and that's fine. We can configure the platform in whatever way the bank wants us to.
Sure. And thanks. Just to follow up on this, what sort of implementation timelines are you looking at in a traditional, let's say if you to deploy in a Westpac or a large mature bank, what sort of timelines you look at?
Once the bank knows what it wants to do, less than a year.
Oh, wow. Wonderful.
To have something in market which is, better, a sort of beta version of a product in market, less than a year.
Wonderful. Thank you. And look, you built a successful platform, and it's you mentioned about the reusable components, and you've already got solutions for retail and business banking segment. You built a world-class platform. It's from greenfield, starting. What has been the experience of working with partners and including Infosys partnership? Any views on that? We've been engaged with you for the last almost 3 years now.
Yeah. So when we started the platform, we started with the view that we should use best-in-class components, and we didn't have to build everything ourselves. We didn't have to own everything ourselves, and it goes back to this notion of cloud native and finding the best possible database, the best possible API management tool, the best possible capability to do AML or KYC. And so we've done a lot of integrations, and we work with 40 partners on the platform. But there are a number of very significant partners for us in terms of delivery, and Infosys has been a fantastic partner for us. It's enabled us to scale the business very quickly, but maintain quality and frankly, do it at an effective price point, which are all the necessary things for a business like ours. In fact, it's necessary for any business. And we know that because of the nature of the work we do, we'll need specific skills in certain areas, but we may only need them for 2 or 3 months. And it doesn't make sense for us to go and hire those skills ourselves. So we're very happy to be able to work with a number of key partners to be able to deliver what we need, and it's worked well for us so far. If I think out more strategically, in the expansion of 10x, which we're about to embark on, the next big expansion over the next 2 to 3 years, inevitably partners are going to provide a key role for us, because we want to get banks onto our platform, generating SaaS revenues for us and other software revenues for us. So if we can work with partners who can help us get banks more quickly onto the platform, that's great. So we always have believed in strong partnerships. We continue to believe it's strategically important for us, and we're very grateful to Infosys for all the support they've given us.
Thank you very much, Anthony, for the endorsement. Look, this is a very different topic, and I think it's close to you from a purpose standpoint as well. Focusing a bit on the ESG agenda, a topic, you've been talking about that a lot. We at Infosys are extremely proud of our own achievements in this space. We have pledged to being carbon neutral or net zero emissions company by 2040. This is, from a milestone perspective, 10 years ahead of the Paris Accord. And we have joined the Amazon Climate Pledge. You'll be pleased to know that we are the only company from India, along with 4 global companies that have joined this initiative. And we continue to do a lot of work in this space. So what is your view on banks' role in driving sustainable finance agenda, and how critical is this for 10x? So any sort of view from your side, Anthony?
If you look at the world today, whether it's COVID or climate change or any other issues that we face, it just shows how interconnected we are as a species on this planet. And I've always believed that business cannot be a sort of net taker from society. And if you think about it, our businesses are only successful if the citizens of our society are successful. And we cannot be arrogant about the role that we play in the world. We have to be humble about it and realize that we do business at the sort of pleasure and control of society. So if we want to continue to grow our businesses and be successful, we have to recognize that we have to be a force for good in the world. Now, is it possible always for businesses to be force for good? There are always trade-offs that will have to be made. And the other thing about it is, you can never make everybody happy. So it's very important to be able to explain why businesses do things in certain ways, and to show that due consideration has been given to ESG matters, and where possible, a positive impact on ESG has been had. Now that was very important to me throughout my career, and it's important even in a relatively small company like 10x, that we have a positive impact in the world, and we do that through a variety of ways, whether it's through our focus on our own environmental footprint, whether it's supporting young people in our local community to become more familiar with technology, whether it's about trying to help banks think through what more they can do to support this very big agenda. But one of the things about human beings is we're not very good at making short-term sacrifices for long-term gain. And one of the things about COVID, it shows that when we have a really upfront, close existential threat, human beings will change their behavior. But with climate change, it's a little harder because it feels further away. So we need to get on the right side of this, and I applaud the work that Infosys has done in this area, because a lot of companies talk a good game on ESG, but frankly, a lot of it is just PR. You really have to act. You can't just talk about it, and that means from whatever platform you have. In our case, we actually believe that making banking 10 times better will have a positive impact on the ESG agenda, because if we have a more effective banking system, we'll be able to fund green activities more effectively. We'll be able to help the consumer make better decisions and so on. So it's enormously important, and we're again very pleased to be working with a company like Infosys that puts so much emphasis on it.
Thank you. Look, this is the short term and the long term is so Such an interesting conversation, right? I mean, I was reading that Daniel Kahneman's Thinking Fast and Slow. He said, as human beings, we always overestimate the short term and underestimate the long term. And I think that's the point you're trying to emphasize as well. So, look, it's been a fascinating conversation, Anthony, and I'll close by saying that customer experience and efficiency are the top drivers of digital transformation. I mean, we discussed earlier the banks have done a lot of work and investments in the front end, but still fail to offer sort of a seamless experience to the customers. And the reason largely is that banks have ignored the mid office, back office innovation, and their core technology seems to be unfit for this new world. Today, the technology is available. I mean, the last mile experience, data management, and mobile first mindset in platforms like 10x. And I hope more banks embark on this journey. And from an Infosys standpoint, we're extremely proud to be associated with the 10x right from the beginning. And it's been an absolute pleasure to speak with you. And I look forward to a strong and enduring partnership with 10x. Thank you so very much.
Thank you. I really appreciate it. Thanks for everything.